Hi everyone, hope you're doing well. Grow's IPO opened today, and if you got allotment, well, congratulations. I thought I'll review top 10 recent IPOs and try to make a pattern there on when and how to buy recently listed stocks. And I'll be reviewing 10 companies today, and I'll try to see if there's some pattern in there and share that with you. So without further ado, let's start getting into it. Now, I hope I'm still visible on the camera. The first company I want to review is Swiggy. So, what was Swiggy's story? Now, normally in any IPO, you do a listing, then there are certain lock-in periods before which the insiders or the promoters or the institutional investors cannot sell a large sizable stake. So normally you have a lock-in after 1 month, 3 months, 6 months, and so on, when the restrictions on insiders to sell usually is lifted. So I want to see if there is any pattern in these restrictions lifting or lock-in periods lifting in the performance of the share prices. So without, without saying anything, it goes that this is not investment advice. This is just general information sharing that I'm doing here. So let's see what happened with Swiggy here. Now, Swiggy listed with a lot of buzz. The Swiggy stock was listed below issue price, about 50% discount, below whatever the issue price was. And after the broader sell-off, as you can see, it listed on somewhere around beginning of November, 14th November. After about 6 months, you can see within these 6 months, there's a large selling pressure that has happened here. And we all know that the selling pressure happens because the insiders are selling, and therefore there's a large sell-off that happened because of which the stock underperformed. And then it started recovering from there as the market started finding value in that stock. So there's a very important thing to note here. The first selling pressure starts when the first lock-in period ends. That is what you see here in the first decline. And after 6 months, another lock-in ends when more insiders, employees, management, etc., are selling shares, and there is another selling pressure that is created in this period. So very interesting pattern emerging. Now let's look at another company that listed, recently this year. This is Acme Solar Holding. Now the story here was that again this stock was listed at about 13-14% discount to the issue price, and then it kept sliding, right? So it was about, I would say, around 16 to 17 pressure percent below its issue price after the recent 3-4 months, while the lock-in was still in place, and then started recovering from there. Next, we want to look at another stock, which is NTPC Green Energy. Now here again, the lock-in period ended after 1 month, and therefore you can see that after the listing there's a broad decline in the price, and since then it has stayed flat, right? Another larger shareholder lock-in expired on 24th February. So around 24th February, which is around here, there was a large lock-in expiry, and the stock fell by 17%. So very important point to note that there is a large decline that corresponds with any kind of lock-in period ending, whether it be after 1 year, 1 month, or 3 months, or 6 months. Now let's look at another one, somewhat smaller issue. We are looking at Suraksha Diagnostic, which was around a 16,000 crore, 1600 crore issue. And again, same pattern repeats. Usual decline after 1 month, the first lock-in ends, and there is a major decline there. Again, with Suraksha, there was a decent Q3 numbers. However, the stock was 32% issued below stock price, below issue price, and there was a steady drop, right? So there was a constant downward trend in the stock during the first 6 months while the lock-ins were expiring, and since then it has stayed broadly flat. Another large stock that listed, Afcon Infrastructure, 50,000 crore market cap. Broadly, the similar pattern can be seen here, right? So the listing was at a discount to the price, 8% discount, and still trades below the listing price, right? And there was, as you can see, first 6 months, there's a usual declining pattern as the lock-ins expired and the insiders sold. So I think the story is getting quite clear now. Now, if it is still not clear, I'll just spell it out for you by looking at 3, 4 more, similar kind of stories. The next one that listed in the recent 1 year period is Canaro India. Now, this was again issued highly below stock price. So it was issued actually at 50% below stock price. So this is one of the worst performing IPO listings that happened recently. And again, very clearly you can see for the first month and all the associated lock-ins expiring, there's a clear trend of decline over here. There's a bit of consolidation after the lock-in periods ending, but there's a clear decline in the first lock-in and the second, third lock-ins expiring, right? So I think the story is clear. If you're observing the pattern on any of these recent listings, they are usually being listed at a very high markup. So there is not much left at the table for the investor. IPO pops are usually rare. Only in rare cases like Grow, there are IPO pops. Most of the times, these are listing much to the discount at listing price, and there's an immediate declining trend that starts. There's a large sell-off after every lock-in period expiry, whether it be 1 month, 3 months, 6 months, and usually a similar kind of chart pattern is seen. This is the kind of story that plays out within the first year of listing. Now, before we go ahead, if you're not yet subscribed to the channel, make sure that you subscribe. If you're not on our Telegram group, make sure you join the Telegram group. The link is in the description. And if you're somebody who is interested in monitoring different kind of portfolio performances, running simulations, running scenarios, I have recently created this portfolio modeler tool, which you can use for doing your own analysis. So you can go to the portfolio modeler tool. I'll share the link in the comments, and you can model it on the weights of the stocks or on the amount of stocks. So just as an example, if I want to do a portfolio of two stocks, let's say I put 100 rupees in TCS and I put another 100 rupees in, let's say, HDFC, then I will be able to see what the performance has been look like in the last 1 month, 3 months, 6 months, and 1 year. So it takes a bit of a time to fetch the data. And after it has fetched the data, it calculates the performance of the portfolio by weighing it by the weights that we have given. So data has been fetched. As you can see, the last 1 year performance has been -5% for an equal weighted portfolio of TCS and HDFC Bank, which is expected because IT has not been performing very well. Also, if you're somebody who's interested in starting a career in finance, then you can start subscribing to nismgym.com. This is my website where I've created courses for NISM 10th A, 10th B, and 15th. If you're somebody who wants to master personal finance, you can go for NISM 10th A. If you want to master it even further, you can go for NISM 10th B. And if you want to become an expert stock picker, you can go for NISM 15th. You get access to the course material and you get all the combos. Then you'll be able to get all the mock tests as well, and you get live weekly sessions guided by me. So coming back to the performance of different IPOs, the next issue that I wanted to see was Niva Bupa. Now again, it's not been very long. It's been slightly over or less than 1 year actually since this stock has gotten listed. Not the similar kind of pattern, but as the story is more or less much similar. So if you can see, after the 1 month expiry, it is again trading, lower than what the issue price was. The issue again was at discount, that it was down about 5% on issue as also. And then finally, the stock that I want to look at next is uh, Sagility India. As you can see probably here, it's a BPO business. The stock was listed in November 2024. Since then, performance has been mostly flat. The issue was again at there was a lot of institutional demand for this stock, right? So if you guys remember the hype around that time, there was a lot of institutional demand for it. However, it has become a tool of liquidity for the promoter. There has been an offer for sale of about 2,700 crores, and there was a lower circuit of 5% in the stock around the 6 month phase, somewhere around here. Next, the one I want to look at, which has been again a darling, and I think these are some of the stocks which have bucked the trend. So we have looked at Ather Energy, which has done relatively much better as compared to the other listings that we have seen here. There's usually been an uptrend, solid business, but again loss making so far. And then there is one more darling of the markets, which is Urban Company, right? So if Urban Company lock-in, let's look at what the impact has been at the expiry of the lock-in. And this has been the performance so far. So there's been a general downtrend. It got listed around September after the lock-ins have been expiring. There has been a lot of selling pressure and there has been a general downtrend. So I think I don't need to spell out what exactly people need to watch out in recent listings. The pattern is very clear. As and when the lock-ins are expiring, there's a selling pressure. If you think there is value in the stock, you might want to get an entry around those points of time. However, it is generally a good idea to stay back until and at least some of the lock-ins have expired and then watch the trend from there. So this is something that I wanted to share with you. If you like this video, make sure you subscribe to the channel, share it with someone who you feel will benefit, and join the Telegram group. Also join the courses on my website if you're somebody who's interested in making a career in finance. Thank you so much for watching, and I'll see you in the next one.